Well, what's going on, guys? Jeff here with Let It Grow Investing, and I wanted to tell you guys a little bit about First Form. First Form is a supplement company that I've been using for a long time, and they'll definitely help you get on your path to your fitness freedom and your the goals that you have for building a better you. So that whether that's building muscle, cutting weight, whether it's hair, skin, nails, anything else that you're trying to really improve on yourself, get yourself in shape for longevity, for peace of mind, for cognitive support. They've got a product for pretty much all of it. And it's some of the best products that I've used. I've tried everything over the years, and I keep coming back to First Form because it works. So if you want to help me out, help support the podcast, you can go over to firstform.com. That's 1stphorm.com/let it grow and check out some product and see what can help get you on your way to those fitness goals that you've got set for yourself as well. So again, be sure to use my link, Let It Grow, at firstform.com. Hey, what's going on, guys? Welcome back to Let It Grow. Thank you, as always, for being here. I am Jeff, and we're going to have another chat here about what's going on with the market and what we can expect going forward from here. Last week we were talking about some different stocks that we had on the radar. We were looking at Citibank for those rate cuts. We were thinking, maybe some of these banks and lenders start doing a little bit more lending, a little more mergers and acquisitions for companies like Goldman. They'd probably be the beneficiary of a lot of those purchases. We were talking about FedEx. They had a guide down, and essentially, I thought they were getting a little too cheap. We were looking at Occidental Petroleum as another way to enter the energy space. A lot of those stocks have really been pummeled as well as of late, with oil prices coming down, a little bit of demand coming down. I just had another thought here that might be a good stock to look at right now. So let's. I'm gonna write that one down. We're gonna kind of put a little mark right there. We were looking at Estee Lauder for a little bit more consumer discretionary spending, more people getting back out into the workforce. Hopefully we can avoid any kind of real slowdown there. I think we got some jobs numbers coming out this week. We had the PCE coming out this past Friday. So that was a big move there. And then another stock that I've been quietly pounding the table on for myself, and that name is SOFI. With rates coming down, with the fact that a lot more millennials and people that are doing online banking are applying for SOFI. They're refi through SOFI. They're borrowing there. They're using more products over there. I really believe that could be a great stock to buy and hold for the long term. We voted. SOFI didn't get the love. I did buy some more SOFI myself. You guys decided on Citibank, oddly enough. That is one. Well, actually, I bought some FedEx this week. I bought some SoFi this week. I did not buy any Citi, but I will be buying $200 worth in the Let It Grow investing portfolio on Webull. If you do need a link to help get you started, get you a side account or whatever you're looking to get your investing goals doing, if it's an IRA or anything like that, you can use my link and get some free fractional shares through Webull right now. So the link is in the description for that. Easy enough to use. I like it for, the fractional share investing that we do a lot of times. Some of the stocks on today's episode are going to be over that $200 limit. And on Webull, you can simply buy, 0.3 of a share rather than E-Trade where you've still got to buy a full share. So that does help for that. We've got, we got a lot of different stuff going on. Do we want to roll right into the stocks that I was looking at this week? Actually, you know what? I want to pull up this one and let me make sure I don't have anything too crazy there. All right, we're good. We're going to take a look at my E-Trade. I just didn't want to pull up my personal stuff, and I'm going to share my screen here. So let's see what we've got. So I was looking at ARK-K. Kathy Wood was buying up some stocks this week that was driving one thing higher that I don't know what to think here. And actually, I've got a covered call written on PayPal. That was one of the ones that she was buying this week, buying heavy. My covered call, I believe, expires this coming Friday at 75. It's currently at 77.88 and actually down on Friday. So it probably hit around $80. And this is one that has been punishing me for a long time here. The analyst research points to more downside, but Kathy Wood is buying, probably from the fact that she thinks there's going to be more consumer discretionary spending, more money spent online, more money given to your friends, more transactions like that. So probably more visibility in that space, and more spending going on there as well for different friends and family outings, gatherings. We're sending money here, there, everywhere. PayPal, Venmo are going to be used for that. Actually, it says 0.42. I thought it was negative at this point, but maybe this number, I'm not too sure if this, I looked at it earlier, but I thought it was a negative. But anyhow, we do have some price targets coming in, 92, 94, hold at 71. A couple different things going on there, right? We've got a lot of the rate cuts, potentially more cuts going forward. With PCE coming out a little bit light, we were looking for about a 0.2% month over month rise. It's looking like 0.1, so we're going to be more in line with that 2% inflation target that the Fed has been eyeing up. So if we don't have to cut as much, potentially another 50 basis point cut, we could see that, right? Depending on what the jobs market's looking like. A lot of those numbers, we're going to take all that into stride. And I think Powell said recalibrate, like 20 some times the last time they spoke. They're going to be recalibrating every time they get a piece of information. So this is just a piece of the puzzle. I do believe that, the PCE coming in light does show that inflation is coming down, albeit probably not quick enough in some areas for a lot of different people. I think that takes out energy and housing, and those are going to be two that are going to be a pretty critical part of your personal budget. So those are going to be some big spends there. The one that I did want to take a look at here that I just had the idea was going to be Generac. And now what is the ticker for Generac? That's not it. Let's take a look. Can I find it that way? Yeah, GNRC. That's the one. Man, thoughts and prayers go out to Tennessee, to Florida, to North Carolina, to probably Georgia, everywhere else that's been affected by Hurricane Helene. Man, this has been crazy. It is just heartbreaking to see. We've got rain, but we haven't had the floods like what they've had. It's put me out of work for a couple of days, but oh well, right? I mean, they've had everything washed away. It is just crazy to see. So, and I don't really want to just prey on the victims here, but I do believe if people are out of power for a week, 2 weeks, even longer, I think a lot of people started thinking about having that backup generator ready to go for events like this. And other stocks that normally do well through natural disasters, United Rentals is one that always spikes up after this, although sometimes that is a little bit more short-lived. You're going to see more in the way of cleanup efforts and people bringing in equipment from far away to help with those efforts. But I do believe Generac is probably a good, solid company to buy as more and more people are building more houses. We're going to have more demand for people to build backup energy systems as well. So the upside really isn't quite there. And this is just kind of off the top of my head. Something else that kind of just stuck out as something that we could potentially buy to, bolster our portfolios and kind of be in a spot that makes sense. It's probably a little bit more cyclical. If people don't have the money, they're not going to rush out and spend, $5,000-$10,000 on a whole home generator. But I do think that it's going to have its place, right? I think the smaller portable units are going to be, obviously, they're trying to get those everywhere they can right now. But I think Generac would have a good, solid footing at the right price. I think it's a great company. They make some great products as well. So that just kind of came to mind. I do want to take a look at United Rentals. Let's take a look at that one real quick. What do we got there? Sitting at 814, up from Friday, downside overall. It might have already ran over the past 5 days with everything going on for the hurricane efforts. We touched 790 on Monday and now 815. So we're not too high over the past 5 days. Obviously it has trended up, but not as much as I might have thought. So Yeah, I already said we got week 40 done. So let's roll right into week 41. And, a lot of people are talking about some different things here that we might want to buy as rates come down. A lot of people saying, hey, time to rotate out of staples, rotate into discretionary spending, those things that we don't necessarily have to have, but we'd like to have, right? And as those rates come down, money is a little bit cheaper. Maybe it opens up your pocketbook for a little bit of spending on some stuff that you might just want. I don't know that we're there yet. And sometimes that is the time that I want to buy. I don't want to wait until we're chasing it. But at the same time, I'm not too sure what the economy is going to do. So for that standpoint, I don't necessarily just want to run out and buy a Lululemon. I don't know that I necessarily want to run out and buy some of those other, discretionary type spends. But some of them do make sense, right? So I'm going to take that into stride a little bit here as we get through some of this list. The first one up is going to be Costco. Ticker is COST. We just had some news come out from Costco, and they are actually down on Friday. Let's take a look at the news, though. Let's get over to that. So we're at 885. The gift that keeps giving until it doesn't. There aren't an issue for Wall Street, while Wall Street still likes the pricey stock. So we got from Barron's here, we've got Wall Street is still feeling upbeat on Costco after fourth quarter earnings. You wouldn't know it by looking at the stock, right? So it did trend down. On the surface, company's narrow revenue miss was to blame. Total revenue of 79.7 billion fell short of 79.9. That is still a grand chunk of money. That little 0.2 is a lot of money that they missed by, but I don't know that it's that crazy, right? A lot of this was offset by fuel and e-commerce. I do believe those two spends were big, driving this number higher. I think some of their margins, I don't want to read it wrong, so let's just see if we can't find it here. Price to earnings 50 times. Costco shares are priced to perfection. I've said that before. They're saying it here. The sales shortfall was sure to elicit some degree of admonishment from the market. Costco's PE ratio far outstrips its 5-year average at 37.1. So yeah, at 50 times, it is a good bit higher than the 37 times over the past 5 years. In the industry average about 14 times. Potentially, I think the overall S&P average, the new normal is probably around a 20. It used to be like 15, 16. But why would we buy this stock now? Scarcity of high quality retail names with unit growth and share gains. Again, you get some staples in the name of Costco. You're also going to get some of that discretionary spend, right? You can go there and buy anything you want. You can buy gold bars. You can buy shrimp. You could buy, your typical paper products, or you could buy a pergola for your backyard. There is everything there. And, if it's not there, you can go online and buy it, right? That's a lot of the spend that we were just talking about that is bringing up the numbers, even though coming in a little short. So now if we missed with rates being high, with, people worried about their job, as we start to cut those rates and have a little bit more spending available for some other product, or as margins raise a little bit, if they can save a little bit on their cost, but also kind of maintain the same prices, their margins are going to be higher. Granted, labor is still expensive, and that's not going to be coming down. But yeah, I still think it's a great company. I believe that we are raising their membership. I think I saw that. And yes, their customers are loyal. I don't think people are going to run out and cancel their membership for the fact that Costco raises their price membership of $5-10 a year. I don't think that's going to happen. Premium multiple is due in part into its continued market share gains and steady core margin increases. I agree with that. We've got the company blew past consensus estimates and grew gross margins in the fourth quarter. Okay, so we did grow margins, which is nice to see. Top of steady sales improvements at its warehouses. Investments in e-commerce, right? I already said that. Its online capabilities, a low-hanging fruit for the retailer, paving the way for more top and bottom line benefits. So we're going to see Costco should also reap the rewards from its recent membership price increases. Okay, so they did raise On the earnings call, executive noted that the full impact of the price increase will come in the back half of 25 into 26 as consumers renew their memberships. So far, consumers haven't chafed at the price changes. So yeah, I don't have the price there of what it is. It might have been somewhere buried in here. But again, I think there's a lot of things with Costco that we're getting that consumer staple. We're getting some discretionary spending. We're getting a lot of different categories in a well-packaged one stock price, right? So we're not just tying ourselves to grocery. We're not just tying ourselves to, like Best Buy would be, all that tech and probably more discretionary spending. I don't know that that's where I want to be. I'm not too sure that Best Buy is the name that I would rush out to buy right now. Granted, they normally have a great holiday season, right? There's a lot of good things that come along with them, but it is going to be very sensitive to a lot of that spending. They're boom and bust, right? And Costco is going to have that line out the door, essentially, no matter what is happening in the market. So I do believe that the bit of downturn that we've got right now could be a good time to go ahead and buy Costco stock. So that's going to be, stock number one for week 41 from me after a long-winded rant as to why I think that this one could be a better bet going forward. Although there's not a whole ton of upside on the stock right now, I think it gives us some safety. I think it gives us a decent entry point. And I'd be happy to spend that $200 of my money buying, probably about a quarter of a share, maybe a little bit less of Costco stock, right? It says only about 5% of upside, but I do believe that we've seen that for the past 3 years. We've been looking at this thing, and it just continues to climb higher. So yeah, if we even go back to October of 23, we're sub 600. So this has done okay for what it is in that time frame, right? This is a tried and true retail stock that is putting up those kind of gains, and I'd be comfortable to buy it, right? So that is going to be number one. Number two, I know I wrote it down, and now I moved my papers about 12 times, and who knows where that one went. I think it was Eli Lilly. Eli Lilly, right. We've got a lot of calls for Eli Lilly going from about 800 and, well, yeah, we got about 20% of upside. That's nice. Came down on Friday. Decent entry point time. But I do think that a lot of the analysts are pointing this to be a $2 trillion company by 2030. We're sitting at 834 right now. The PE is pricey, but they got a lot of the right drugs in the right place at the right time that are really growing. And I don't know that that's going to stop. A lot of this on Friday also went down from Novo. Is that the right ticker? Yeah, I got it. Look at me. NVO, we got that one trending down. They are going to have some price wars. And so Novo went down about 3% on Friday as well. Someone was going after them about their price on whatever their weight loss drug is. I always forget the two. But I know that was going to be a big problem with them. But let's go back real quick. Let's take a look back at Eli Lilly. Wegovy and the tirzepatide, probably saying that wrong. Those things are still growing blockbuster numbers over the past 4 quarters. I think the lowest gains was about 24% per quarter, or the revenue growth was above 24% at every quarter. I'm definitely bullish on Eli Lilly going forward. They have just been on fire, and I don't think that it's going to stop. I think more and more people are pointing to the fact that this could continue to rise, and I don't think that we're going to shy away from this one. I think the drugs that they have, the pipeline that they have, management's been doing really well. Man, I really think that this could be a great stock to own long term. And I don't know that we're done growing, right? I think the next 4, 5, 6 years could be really strong for them as well. And after this run, it really is hard to buy this thing, right? If we look at the 1 year, again, like Costco, we're sub 600, and now we're sitting in the upper 8s. And you have more upside. I think that this thing continues to go higher. You got faster growth than a Costco. and you're not so tied to consumer cyclicals. You're going to be more in that healthcare space. So I do believe that it could have great growth ahead of it. I don't know that I did talk about Merck a couple weeks ago. I know that had a deep pipeline as well. Did that ever make it in here? I'm not seeing it from the past 4 weeks, so probably not. But Merck also looks like they've got a really strong pipeline, and they're going to be churning out some really, high-profile drugs that could really be blockbusters over the next, I think it was like 18 months. So that is definitely one to keep an eye on as well. Probably a little bit more upside, but Eli Lilly is a little bit more tried and true right now. And I'm telling you from Friday, I know some of those price wars were coming in on Novo. And I still think that Eli Lilly is a great stock, and it could potentially be a good entry point with some of these price wars on obesity and diabetes drugs that they are selling right now. Could be a good entry point. So I'm going to take number 2 as Eli Lilly. Ticker is LLY. Number 3. I did go ahead and buy some of this one this week, and that name is Global Payments Network, GPN. When we're looking at credit cards, right, and I've said this before, as rates come down, people are spending on their credit cards. As rates go up, people are still spending on the credit cards. Global Payment Networks gets a piece of every transaction that is swiped or used on a card, right? So their networks are the things that make other credit cards function, essentially. So Global Payments is going to be, they have a lot of point of sales things. If you're looking for them at different retailers, you'll find little Global Payment Networks like symbols on there, or sometimes on the display, it'll be on there. I was at Site One the other day. I saw it there. And Global Payments is just a solid stock that really did get traded off. This is showing you about a 41% of upside. Very limited on the downside, only about 1% of downside, and potentially 92% of upside. So I did go ahead and buy this one. I already had a position in Visa. We've had American Express. I think we bought around this time last year. I, for one, like Global Payments here, as all of them are essentially feeding that global payment network machine and churning out more revenue. So this thing did move up. I did go ahead and buy this one, I don't know, Wednesday or Thursday. When it rains and my work slows down, my spending and my selling on E-Trade is abnormally high. I'll go ahead and admit that. That's fine. A couple things I did sell this week. Alibaba, gone. Baidu, gone. There is some in my kids' investment accounts, but out of my brokerage and out of my IRA. I told you guys at 100, Alibaba was gone. Well, I sold it a hair early. It did climb up to 107. That is for the fact that China is pumping stimulus into the economy, and they are trying to save their market. They're trying to, really drive these stocks higher. I don't want anything to do with it. I don't know what they're going to do next. I probably don't follow it close enough to know just about how everything in China works. I bought it from the standpoint that when I was looking at it, I don't know, 6-7 years ago, there was probably 100% of upside, and I got tanked by this thing. So now that it finally came back up to a point where I was comfortable selling it, it's gone. I'm not getting back into it. I don't fault you if you do. Sometimes they look like great stocks. But yeah, if I go over and take a look at JD.com, probably also up big this week, 5% on Friday alone. Baidu, let's take a look. BIDU, Chinese Google, essentially. BAIDU is the company name, up 2.5%. NEO, one that I am still holding. I don't know that I want to let go of that thing yet. I was really trying to load the boat on NEO when it was cheap, and then it got beat down even cheaper, and I bought more, and yeah, now it's up 13% on Friday. So I might ride this one for a while and see what doesn't happen there. And I like the fact that they're getting more into Europe and potentially getting into the US at some point. We're not there yet, but yeah, kind of a sidebar. Getting back to the fact that more and more people are spending on those credit cards. But yes, I did get out of Baidu, and I did buy some GPN. I also bought some Micron. which is a complete sidebar. So GPN is going to be number 3. Micron, man, Micron killed it. This is potentially one of my greatest 1 week long plays that I don't normally buy before earnings. This thing shot up like 15% on Wednesday or Thursday. Yeah, you can see that gain right there from 95 to about 112. I was tickled waking up to that because I bought Wednesday. I added pretty substantially, and I had started a position the week prior. And hey, it paid off. So I got out of, like I said, Baba. I rolled it into here, and it seems to be a good play, although Alibaba could potentially still rise. There's nothing saying that it won't. I bet it probably will. I'm just not going to be there to see what happens with it. So Micron, still around 38% of upside, not stock number 4. This was on last week. I was telling you guys last week that I was buying it. Was it on last week? No, sorry. This was on 38. But I do recall talking about it last week. So I definitely think that it was at least top of mind last week. So I'm definitely tickled with that one. That is doing well, which brings me kind of to my next stock, which is going to be Lam Research. Potentially could see some big move up from Lam Research as the semiconductor market kind of bottoms out. We saw that from Broadcom. We saw that from not NVIDIA. Someone else was just talking about it too. Maybe Qualcomm. I'm not too sure. But Lam Research was pointing to the fact that things are getting better as, they're starting to really bottom out. So I do think that at 827, we're at a spot where we can comfortably add to Lam Research. I don't know that it's fully done dropping, but I am comfortable with the risk reward here, right? We've got on the low end, we've got 8% of gains, on the high end around 51%, and average out to about 29%. So even if we buy now and it drops, I don't think it's going to be that far. And potentially in a year, I think that we could creep back up to that 1,000 mark. I really do. So this has been a long-term hold for me. I probably own this well lower than here. I don't recall if they were doing a 10-to-1. They might be doing some sort of split. I might have to check on that. Doesn't really matter. It doesn't really change anything except for maybe a little bit of options action, but that's neither here nor there. The fundamentals of the company don't change. But yeah, if we look at this over the course of, let's just look at 5 years, right? I'm probably back in this 200 type range, and it's done really, really well. But then again, if we look at, and this is one that's going to make you sad that we didn't buy this a while back, the iShares Semiconductor ETF. You want to really cry. Everyone should have been buying this 10 years ago. If we look at the performance on SOXX, the iShares Semiconductor ETF, growth of 10K over the past 10 years. Oh, yeah, it'd only be $88,554. Should have been buying that, right? And I could have paid off a lot of stuff. So, yeah, that would have been awesome. But, yeah, I think when you look at this, you got to think if we're really at a lull right now, if AI is really going to be built out, and this is just the entry stages of it, should we be buying more of these stocks? Should we be buying an ETF that has all of these in one basket? I definitely think that you could. I was really itching to take a look at this one. We've got a lot of the names that we talk about, right? Broadcom, NVIDIA, AMD, AMAT, Qualcomm, Monolithic Power, Marvell, Texas Instruments, which is, a little bit more generic, I guess I'll say, KLA and Taiwan Semi. So a lot of great stocks there. And man, if history repeats itself and we are in the beginning stages of AI and just how much adoption we're really going to have in semis and the Internet of Things continues to go up, man, I think that this could be a great thing to have long term. I don't know that we're going to see this 9x play next 10 years, but I definitely think it's going to continue to grow substantially. So certainly something to think about. Where do you see your money growing in 10 years, and where can you invest today to really get those kinds of returns? Is there an AI basket of ETFs that we should be buying? I'm sure there is a great ETF that is going to be looking at AI stocks for the future. So number 4, we had Lam Research. I do believe in the chip space that is going to be a winner, although in the short term, it might continue to sell off, but I do think it should be on your radar as something that could potentially serve you well going forward. Next up, this was off of I was using the analyst recommendations by tip ranks on E-Trade. If you do need help getting started, I do have some links for E-Trade as well. And they happen to, be trending stocks. That one, I was already looking at Costco. I already bought Micron 2 weeks ago, so I wasn't really paying attention to that. But I did go to all trending stocks. I was looking at this one, and sometimes it's hard because there's going to be stocks that are going to pop up that are going to say strong buy, like AETUF, ARC Resources. But there's only 3 recommendations. So that one really doesn't get me too excited. So it's probably more of a small cap name. But I did kind of keep scrolling down until I found one that I liked. And that was going to be Intuit. And it is a strong buy. 12 buys, 1 hold, around 20% of upside. Average price target, or this might be a tip ranks price target. No, that's average, is 741. So I went ahead and I looked at Intuit, right? And I was thinking, why this right now? And you think as more rates come down, well, small businesses are going to be using Intuit. They're going to be using QuickBooks. They're going to be using a lot of the different programs that Intuit uses. More people are going to be employed potentially. More small businesses are going to get started. More subscriptions for that. I use it myself, and I know a lot of others that do. So I'm thinking the stronger the economy is, the more small businesses are starting, people trying to do their own thing, do their bookkeeping, do their taxes, and do their payroll. All those things are going to be fees for Intuit. Every time someone swipes a credit card, Intuit's getting a cut. If I want to borrow against my business, Intuit does that as well. There's a lot of different things that they do in that fintech space, in the business space. There's a lot of ties to a growing small economy. A lot of those people in the small businesses are going to be borrowing. There's a lot of different levers that Intuit can pull to make some money right now. So the fact that, one, we've got a strong buy stock. I think we had around, 20%? Is that what it was over there? I think it was. Yeah, 20%. We got 20% of growth of price target upside appreciation. That downside is fairly limited. I can understand a reasoning to get into Intuit right now. And I think the analysts see the same thing that I'm seeing. Potentially some good growth, limited downside, decent amount on that upside too at 795. And this is from 21 analysts. So it's not like there's 2 people. It's more of a mid-cap growth area. And I think a strong economy, I don't know that we're out of the woods yet, but I think a strong economy is going to benefit Intuit going forward. And so that's the 5 that I got there. Costco, Eli Lilly, Global Payment Networks, Lam Research, and Intuit. So you can vote on these on the Spotify link, on YouTube, or on the Facebook group for Let It Grow Investing. And that is becoming a lot to manage. So please get your votes in. I definitely would appreciate that. So I know what you guys think about these. If you got stocks that you want me to take a look at for next week, drop them in the comments, drop them anywhere that I can see them on any of those 3 that I just mentioned. And let me know. Let me know what you're thinking. I did get a couple comments about DJT, people looking to buy that, people looking to short that. A lot of different action there based on the election and Trump media. It's not something that I'm going to be buying, but hey, I did want to bring it up that people are playing it for the fact that it is very volatile right now. And hey, anything that happens is going to sway this thing one way or the other. So very volatile and probably at about a yearly low right now. I haven't even ever searched for this before. Analyst research, we got upside on this. What do we got? Nothing from tip ranks. Thanks a lot. So yeah, not something that I follow, but thank you guys for dropping the comments. I definitely appreciate it. Going forward, I talked to you guys about Deere and Caterpillar stock, specifically with Cat. I said that I wasn't buying it simply because we went down 50 basis points. I thought it was already high enough. I didn't really think that we had a lot of room to run higher. And hey, I was wrong. I will admit to that. Well, the government kind of threw a curveball at me, and that does happen. So I think we were sitting probably somewhere in the 360 range, and I think we jumped up to 397 on the 26 down here. So we did have a decent amount of movement over a week or two, right? And that was in fact to do with the rate cuts, but also to the fact that Deere was potentially looking to move some of their production into Mexico. And I believe Trump said that he would tax them 200% on bringing their product back into the States if they did that, which is driving more and more people to cat stock because Deere was trying to make some plays going another way and going against the U.S. in some ways. Obviously, they're looking to outsource and save costs in some different plays, but this did have some effect there for a while, for at least a couple days on Deere. Now I'm trying to see where it was. It might have been here. It might have been this little dip. But I know that some people around the same time were buying Caterpillar. It doesn't really look too noticeable on this chart, but I did see it this week. And yeah, you wouldn't really even notice it there. But Cat did really run up, was the point of the story. And I was already there, so I'm comfortable with it. I wasn't going to rush out to buy it for the standpoint that I was already in it. And I don't think that half basis point cut was really going to do anything for me. The amount of downside on Cat is, I still don't see this thing exceeding this for too long. I do think that we're going to kind of pump the brakes here if things don't go just the way, perfectly right on that path. So I can't see buying it. I could probably make an argument to trim a little bit here, but I don't know that I'm going to do that either. I did go ahead and sell some McDonald's. I had a limit sell on that at 302. It sold there. Again, another one that I don't think that there's too much more of upside in. Other analysts agree with me there. The downside and the upside is almost the same. So I don't really feel that I need to just tie onto this one. I think the peg ratio was really high, if I'm not mistaken. There's some other things there that looked really skewed. Enbridge, I did completely sell out of Enbridge, and that was a big sell for me. This is something that, again, I did not see as much upside. The dividend was great. I didn't really see too much in the way of the stock being any more room to go up. So again, I sold out of Enbridge and I rotated into some other stocks. So that was just something that I felt that I needed to do to kind of pivot away from there and build up my Chevron position. I bought a little bit more Devon Energy. What else? I bought some Google, bought some SOFI. I told you guys that. I bought some more O. I'm still looking to build up that dividend. I bought some more Verizon. Again, not a ton of upside there, but I think it's got around a 6% dividend. More spending coming online. I do think that Verizon is going to be fairly safe. Not to say that Enbridge isn't. I bought a little bit of Verizon, not a whole lot, a handful of shares, nothing crazy there. I think my big buys for the week were probably FedEx, GPN, Micron, and I added an okay amount of Chevron, nothing too insane. Another stock that was kind of crossed my mind as well. Well, one, Roku. Let's take a look at Roku. Kathy Wood's ARK Invest team says that by the end of 2026, Roku could have around a 712% upside. It's apparently the largest streaming platform in the U.S., I believe. I don't see how this thing is going up 712%, but then again, I don't see how she thinks that Tesla is going to go up to 2,600 or whatever she says that Tesla's going up to. I still don't see that. Could it land somewhere in the upper hundreds? Sure. I just don't see that 2,000 mark happening unless they are the only ones that figure out autonomous driving, full self-drive with no beta, no driver. That's a different story. But I do think that they're in the lead there, but I don't know that anyone else is just going to let them run away with it. So again, Roku, I'm not buying it. I know a lot of people are pretty well turned off by what ARK Invest is doing anymore. It is in the red over the past 3 years or whatever this chart is on the right. Yeah, we're seeing a lot of 3 year being negative, negative, negative. But yeah, Broku's number two. Tesla is their number one hold. Coinbase number three. Roblox, yeah, I don't know about that one either. CRISPR, I really hope that they can do something with gene editing. That's going to be huge. Palantir, I would continue buying that one. Shopify, should probably buy some of that. I should probably take a closer look at that. Intellia Therapeutics. I know a lot of these therapeutics and pharmaceutical small companies have a crazy amount of upside right now. I did buy more Viking, VKTX. I did buy more of this one. I am trying to build that position. I think I bought around 61 and it's about flat from where it was, but I still believe that this thing could go up further. She also said that UiPath had around 220% of upside in that same time frame by the end of 26, I believe. I'm really hoping that Viking can do any of this close to the 78% of upside that I'm really hoping for with some of their weight loss drugs that are coming out and going through trials right now. That'd be awesome. Another one that I think I was still buying maybe last week was UPS. This did start taking off on Friday as some of these prices are coming back down as inflation comes back more in line. This one did move up. It did go down to like 127 within the week, and hey, we moved back up to 134. But I'm also getting that that about 5% dividend yield. So yeah, we moved from 128 up to probably 135 somewhere in here. 135.50, and yeah, we tailed off towards the end of the week, but definitely one that I think could do well going forward. With FedEx as well, right? We saw UPS kind of trade down with FedEx. I told you guys I bought this one. That 5-day was decent, right? I was probably buying some back into here, and we moved up on that one as well. So yeah, I still think that yes, they guided down, but I think a lot of people were a little overzealous in selling this thing off and really thinking it was just falling to the floor. And I do believe that this thing will bounce back. I don't know that the analysts quite agree with that yet. There's probably not too much in the way, 15% of upside. I'd be comfortable getting up to that price. I might trim it and then rotate it somewhere else. Again, I did buy some Target. We've talked about that one, and this is not really just about what did I buy this week, but just companies that, again, I think kind of like a Costco, you get a little bit of consumer staples, a little bit of discretionary. The margins are improving. Their theft is, their shrink is actually shrinking, which is good to see. They are keeping that a little bit more at bay. A lot of the problems that they had with the woke agendas are kind of simmering away. They had a decent last quarter report. They moved up nicely. They got around that, 16 and a half, 17% of upside. The dividend is fairly well covered. So I'm happy that I bought this one when I did. I think if you are looking at Costco or looking at Target, I could really make an argument to buy Target. You got a stronger dividend. You got a little bit more upside. The PE is more, easy to bite your teeth or whatever I'm trying to say. Go ahead and purchase this thing versus a Costco with a PE that's much higher, with a dividend that's much smaller. A lot of different things could point to the fact that Target could be more of a turnaround play where Costco is already priced to perfection. So yeah, 16 on the PE there. We've got 54 at Costco and only 0.5% of dividend yield here. So hard to say. Definitely hard to say which one's going to be the winner long term. Costco has really had a great chart. Target's been a little bit more of a roller coaster ride. Costco looks more like a mountain you're trying to climb, and just kind of keeps going up, right? So hard to say there. I think if you want a little bit more risk or roller coaster ride, Target could be that one in the short term, but I think long term, Costco continues to win. So yeah, we talked about the PCE. We've talked about the fact that labor's coming up this week. That's going to be a big driver of the market. We talked China. We talked energy trending down. We talked about the fact that I think that some consumer discretionary might be a little bit too soon. I do believe that some of them are going to be great picks, but I'm not too sure which ones are going to win right now. So I'd rather be a little bit more diverse in my approach as to what I'm buying, not simply running out and buying any one tech stock or any one like a Best Buy, something that's more specific, a retail, a little bit more diversified of an approach. I think that could be a better bet going forward. You know, again, thoughts and prayers with everyone affected by that the hurricane damage. It is just terrible to see all that damage, knowing that all those roads around Asheville are just closed, and the only way in or out is by essentially helicopter at this point. So that is definitely sad to see, but I do think that some of those stocks in the rebuilding and generator type spaces, United Rentals, some of the your Best Buys, your home or best not Best Buys, your Home Depots, your Lowe's. I think that those are going to be strong in the sense of rates coming down, people building more, and now having to rebuild all these properties that have been destroyed. I think that those could have a little bit more upside going forward. So just a lot of different thoughts top of my head as to what's going on this week, where we can go from here, and essentially what I am seeing out there. So thank you guys again for stopping by. I think I covered everything that I had on my mind. It's been for being a rained out weekend with sports, we tend to still stay busy. So thank you guys for stopping by. It's probably more of a rant this time than I thought it was going to be. I thought this was going to be a short one, but now I'm at 45 minutes and it's time for me to run. So I will talk to you guys in the next one. Thank you for stopping by. Make sure you like, subscribe, and share. And thanks again. Take care.